Good morning, everyone. It is Wednesday, February 22, and we have the FOMC minutes today at 2 o'clock. 2 o'clock in the afternoon. I'll throw a couple of things up here to look at with that, but going over how we landed yesterday. A few things that I'm seeing very erroneous or odd, you might say. But anyway, 3 days in a row dropped down greater than minus 1% from the previous day's close. Yesterday did not close above that minus 1% level, 40.3830. That was my expectation. That was why I went very aggressive into the safe trade that was outside of the safe edge, and I still got rolled over on no catalyst. No catalyst whatsoever. Vladimir Putin came out in the morning, didn't say anything threatening whatsoever, and our economic data in the morning, PMI, was actually very good. It would have been the kind of PMI data that would come out and we would rally 70, 80 points on the day. Anyway, we close down here. So here's a couple of things that I've seen, right? 41.95.44 is our high of the month, high of the year, high since we ran off the October low, which I pointed out 3 weeks ago, how it was our top. 20%, a little bit greater than 20% of a rally. It is our top, looking for the downside. This downside move that we had yesterday was only a 57-point range. The volume on SPY, which I'll bring over here quickly, let me diverge, exactly 2%. Very, very odd that you're going to see something like that. Exactly 2% down on the S&P. Exactly 2.5% down on the NASDAQ. The Dow actually visited and closed right at the 2022 close. So, again, odd. Today, after the close, we have NVDA. NVIDIA is the number 4 weight on the NASDAQ. NVIDIA is the number 7 weight on the S&P. So again, not to diverge too much, but go back here where we are. 200 points. 3 days in a row we've closed red. We have 2 red weeks already, and we wasted those weeks. 29 points and 17.5 points. 5 days in a row we have gapped down. We've not had a 80-point range, 70-point range during the course of any of this since we had that move where we gapped up back in, where was this? 2 weeks ago. What, February 10th? No, February 9th. We had that big gap up above 41.17, 41.56. We knew that we were going to be short. We got short and we closed red. It was one of the other rare occasions where you have a gap up of greater than 10 points and you wind up closing red. So again, just bringing you back to what I'm seeing here. Absolutely no catalyst, had no choice, got to roll it over. But again, looking over on the FOMC minutes, this is the previous FOMC minute, January 4th. Now understand, we put in the low of the year on January 3rd. Come back here to November 23, FOMC minutes. This was the day before we went on holiday for Thanksgiving. So very clear and very obvious it was going to be an upward day. October 12th, flat the entire day and then closed down red over on all the indexes, fractionally on the Dow and NASDAQ, a little bit greater over here on the S&P. The very next day was CPI, and that was the day when we had our big 120, 130 point gap down and 200 point rally off of that October 22 low of the year. And I will bring you to that very quickly over onto the charts. First and foremost, using an Elliott wave view, this very much looks like a completed ABC where we have bottomed down where we are right here. We're just greater than 23% retrace from the October lows. 39.26 would be a pristinely perfect retrace. I was talking about 39.50, 39.20, as low as 3900. It would be pristine, but everything out here is showing that we are pretty well oversold, and now we're unfortunately sitting around waiting for a bounce. Bring it in here to the Thanksgiving view, which has all of our views with all of our data, and I want you to just see how we're looking here. Having run 20 points, this trend line is what I'm pointing out to you right here. This trend line right here is where I'm being very specific about, coming off the October low and the December low. All right. Now come over here onto the 1 minute chart, and that was where we made contact, which you can almost see because it trails right along that 38.2 retracement to the all-time, or the October 22 lows from the all-time highs. Right there, 39.98.51. Again, very odd, very weird how we decided to come down right to that point and then go ahead and close right on that trend line, which is that trend line you can almost see right there. The trend line coming off of the highs of the year, going back to January and March and August, is well down here at 39.26. I had not expected that the support line was going to cross over the resistance line as early as it was. But in any case, the 50 retracement going back to the lows over there in December is right here at 39.80. And it's also your 50-day moving average, with the 200-day moving average down here at 39.41. So you now have 4 protective barriers over here in this range. You have the protective barrier of the trend line coming off of the October low and the December lows. You have the 38.2 retracement from the all-time highs down to the October lows. You have the 50-day moving average sitting right here, which is moving upward, right here around 39.80. And you have the 200-day moving average down here at 39.42, which is moving fractionally downward. So it is a scenario where, as you can see, having dropped 4.77%, it does appear as if we may have gone ahead and dropped too much too quickly. And coming over here on SPY, this is the lows over here on January 31. So we've taken out February completely, and we just so happen to be hanging out right here. Looking at a retracement as to what we're looking there, we've got a little bit of a lower low overnight. So 398.57. And these are the retracements that we'll be looking at for a expected bounce. 403, 406, 408. Now, again, I want to bring on the VIX with these gaps that need to be filled on the VIX, because the VIX is a product that deteriorates. It's not made like a stock. It is made to deteriorate. It's meant to go down. It's meant to decay. It's meant to go to zero. You have these gaps over here on the VIX, which are tried and true, love to get filled. So that gap over there on the SPX, going back to the other day over here, removing our studies and coming on to a 5-day, and we've got that unfilled gap from last week, and we have this gap from the weekend. So with the 2 red weeklies, being that we've got that gap up in that area, the daily on the SPX has gotten oversold. We've reached down into oversold area on the RSI. We're just, as you can see, touching the 50-day moving average, which is moving up, the 200-day moving average moving down. Now, the money flow has not evacuated. We're still in a spot where money flow could flow out. And I've got the true strength indicator downstairs, where down here you can see, as I was pointing out last week, it crossing bearish is very, very bad. It has been very bad going back all of last year. If we are to be in a bull trend, and if this is to be the 1 and the 2 being placed, it will be the fail. So NASDAQ, same thing, fractionally entered into the oversold area, gaps to be filled over the last 2 days. Money flow has not evacuated. Definitely a bearish signal over here on the true strength indicator, projecting for lower lows. So here on the VIX, overbought over here on the daily. Big gap to be filled. That 2102 is there. So again, one of those things to take into consideration, because the most important one for me is when we start coming on to a weekly view. And here on the weekly, there was a very clear buy divergence here on the weekly from the June low and the October low. That's how we got the explosion that we got. We're up there at overbought, like I pointed out last week. Now we've rescinded down to around neutral. And we have 3 red weekly candles that we are working on right here, which again, it's one of those things that for me, because I've been doing this long enough, sticks out, because getting 3 red weekly candles in a row was very, 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 very rare prior to 2022, where we had that 7 in a row, which you had to go back almost 11 years to see the last time we had 6 in a row. Then we had 3 in a row in August. We had another 3 in a row on the way down lower in August. But December was really odd as well because we had 4 as we waited for Santa Claus. And the last 2 were like our prior 2. They were down 8 points, down 12 points. So we're in a very touch and feel kind of place right now. But I've already had to roll my spread over from yesterday. I've had to roll my 39.95 4000s. I widened it out, went to the 39.90 4000s. So I'm in this for today. And again, because of what I'm seeing, because of what I'm looking at, this is the trade that I'm looking at for anyone who's wanting to get in with a risk trade. Obviously, when you enter into any kind of trade, whether it's risk or it's safe, you got to consider, do I have the ability to roll this trade? Do I have the day trades available to roll this trade? If I need to close this trade out later in the day, do I have a day trade available? If you're not in the day trade problem area, you don't need to worry about those things. But still, it is always something that you have to constantly be considering, that do I have the adequate space, and is the risk position that I'm in satisfactory for what I'm dealing with. Don't want to go seeing guys out there overcommitting themselves like I saw yesterday and then turning around and saying, oh, I don't have the space to roll it. I don't have the money in my account. Oh shit, this is going to cost me a day trade. Now I'm in jail. It's one of those things we all do. It happens. Yesterday was beyond unexpected when it comes down to where our range was, how we closed, how we broke below the safe zone, which was out of the safe zone, and we still wound up having to roll the trade over. So be careful, be cautious. But yeah, for today, I am undoubtedly expecting that we should be looking at a bottom formation. It's the week after OPEX as well, which traditionally does like to put in the low of the week, Monday or Tuesday, and then we get a little bit of a bounce rally as we head into the end of the month. Whether we can get another downside move prior to the next full moon, questionable at the moment, but I do think that we're due a sympathy bounce, get overbought, and then we can have another move to the downside. So see you guys in the chat room.